Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, as the Australian dollar hits a decade low of 66.61, the RBA sends a message that they are comfortable with current interest rates. The RBA statement of monetary policy on Friday said that it had cut its 2020 year average GDP growth forecast from 275 to 225. Along with that, unemployment rate forecast was lowered from 5.25% to 5% by December 2020 and from 5% to 4.75 by December 21. It is assessed from a technical point that the level is still holding in at 66.60, even though we've had two attempts at this level on Friday and also this morning. But from the slight rebound and also the fact is there is some divergence, do keep you on your guard in case we get a squeeze back up towards 67.15, seen as minor, above that firm at 67.65.75. If we do get a break at 66.60, then this would expose the region of 64 cents. Look into the US dollar, which measures the greenback strength against a basket of 6 major currencies, is that the US economy is continuing to fire up on all 4 cylinders after a better than expected Friday's job report. And trade optimism put an exclamation point on a week that shows the US economy is in a very good place. According to the Bureau of Labor Statistics, total non-farm payrolls employment increased by 225,000 in January, easily beating the expectations of 163,000. The headline unemployment that is, rate ticked up from 3.5 to 3.6. Now, with the level taken out at 109.55, exposes the region of 108.20 to 108.70, where I do feel there will be some profit taking. Also, the fact is that the dollar index surges to a fresh high of 98.57, last seen in October 2019. So this also puts a further emphasis on the euro bearish sentiment. Due to the safe haven demand returning on Friday, along with the greenback strength, dollar yen has posted a slight retreat, but slowly gaining this morning. Still capped around the level of 109.85 to 110.30.60. I do anticipate the market will look towards 109.15 this week, and maybe lower towards 108.45 to 55. The British pound has also taken out key support level, seen at 129.10, and from that exposes a region of 127.25 to 127.70. Any advances should find a struggle beyond 129.25. Therefore, I do expect to see the weakness continue on a broader picture to 124 to 125. Taking a look at the pick of the week, the euro sterling still looks to me, since the break of 129.10 in the British pound, that further cross-related bulls will return and look towards 85.15 resistance. It is anticipated that we could see a further rise up towards 85.50.55. With dips to be shallow, I do expect to see on the day holding around 84.65. Gold is still holding to a relatively bullish outlook and still at this stage is looking towards 76 to 85. Now if it clears 85, then I do anticipate further risk of a rise up to the 7-year highs seen around 1,600. With any pullback, see support roughly around 68, 62 to 50, 54, and beneath there 48 to 35 to 42. So there's a lot of support seen on the downside. I like these technicals also. We should keep the balls in play. Well, we're still a little bit uncertain how the oil's going to turn out. After the posted inverted hammer, the market's still somewhat negative, even though we've seen at least some recovery, but not taking out the support yet, which is seen at $49. While that holds, I still hold my view up towards somewhere of 51 to maybe as high as 53.80 as a potential target. See if the market can maintain above $49, then therefore the bulls will continue to hold. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day and week.